Good morning, everybody. It's Chris here from Serene Education with the 4 Majors Notes update for the 31st of August 2012. Hi guys, hope you had a fantastic day yesterday. Let's have a look and see what happened on the market. So, end of week, what's been happening? Let's have a look at the weekly candle. Oh, Euro, very indecisive. Not really going anywhere very quickly, hence the reason why we have a lot of wick and nobody at all. So, buyers and sellers are clearly not working with each other here. Tiger War, and sure enough you can see that the weekly candle is very negative or very indecisive. How does that pan out on the actual daily? You can see quite clearly here, price trading in a consolidative range. Okay, not really going anywhere. So what do we have? Friday, Thursday, Wednesday, Tuesday, Monday. So you can see that the last 5 days or 4 days, we haven't seen the end of today yet, trading at a resistance, clear resistance above it, and clearly supported it below it. So you can quite clearly see here, hesitation, bullish, upside, consolidation for this pair after testing a channel high, but also moving into this major support and resistance level here at between the 1260 and 12700 mark, which happens to be previous support and resistance, as well as the major downtrend. So the intermediate trend is up on the daily. However, price is coming unstuck here at the top end of this channel, which is coinciding just short of the major support and resistance level, as well as that major trend line. So what does it do in the 4 hour? You can quite clearly see here the 4 hour between 1248 and the 1258. You can see quite clearly we have this consolidative range. Price just sitting in this consolidative range, not really going anywhere. Yes, you can trade this intraday, guys. I'm not saying you shouldn't be trading it. However, all you guys out there that are trading bigger time frames, this would potentially be a pain in the backside, because by the time you actually get a decent signal to go long or short, you end up turning again. You know, it's just typical consolidative channel, bang bang bang, up and down, up and down, up and down. We had a lot of selling yesterday, bearish engulfing candle, and the last going into the 16th hour now, you can see prices consolidating at this 1248.50 mark. So 1248 area, like to see a break and close below that, because it will definitely confirm that this area at the top here, there's no more upside movement in favor. You can see the RSI here is telling you clearly that there is a changing of the guard. You can see RSI dropping while the price was reattempting each occasion. So you can see this particular attempt over here, the first attempt, you can see RSI is an all-time high on below, and then the second attempt over here, you can see RSI is well below the previous one. RSI wants to be complementing prices moves, is to confirm that the actual sentiment behind that move is genuine. Here you can see quite clearly as we headed into this upside here, the RSI period was lower than the previous one. So it's telling you the sentiment wasn't genuine behind the move, and sure enough we had a fall back towards that price support. Where did it go to? Well, you took the high over here, for example, to this consolidative bounce to the upside. 100% would have been our first target, and sure enough you can see price move towards 100%, and then some lower going towards that area, almost just short of the 161.8. So consolidating at the support here. What do we need to see from this? Well, we can either see another bounce. You can see quite clearly here we had a bounce not too long ago on the 6 o'clock GMT yesterday. Bounce. If we do see another consolidative candle here, bounce, we could look to see price moving back towards that 1258, 125900 mark again for next week. Other scenario would be the bearish breakout of this 1248, this consolidative holding pattern here is trending below the two intermediate small term trends, i.e. 20 and 50. You can see the intermediate trend line is starting to look consolidative, negative. RSI is still above 50 on our 4 hour. It is moving lower. So break lower than 1248 would see price continuing lower, and we could look potentially at 123500 as our first target long term. You can see a lot of consolidation. Yes, 1 or 2 breakouts, but the major touches are in this area here at 1235, which coincides with previous weekly support and resistance levels at the same time frame. Notice that price has been moving higher, swing high, swing high. We could see price holding this consolidative range towards this area here on our 4 hour chart. So make a note of your major intraday trend is up. You can see this, the institution moving average is below us. The intermediate trend at the moment now on our 4 hour is negative, because we're moving from a high to the downside. Okay, swing low here, Nice one yesterday after an indecision, bearish engulfing. Coming at the support here, we do need to see price now trading below that in order to be a bearish setup. Otherwise, we could be sitting at a holding consolidated range yet again here at the bottom, and we could see price moving higher. There's a hell of a lot of news out today, guys, for Friday. A lot of news on Europe, but we also have the most important one that's happening at the moment now is the Jackson Hole meeting. And there's going to be a lot of things being played over in that meeting. I guarantee you world leaders will be there, and they will be going over a number of things, and one of them will potentially be the crisis in Europe. Draghi has moved away or come away from that meeting because of pressure growing in Spain. I think the Catalonian region has been asking, or apparently been putting together a bailout plea. So I think he's moved back to Europe to go and see if that's genuine or not. But he's not attending because of the issues, the growing issues that we're having in Europe, with Spain being the next party or country with the huge issues to deal with. Okay, so holding pattern. If you're looking to trade today, I'd rather stay away from the market, to be honest with you. There's a lot of news, especially the one in Jackson Hole. We could see a lot of speculative trading, but you can quite clearly see that we are trading at the support here of in a consolidative range to the upside. Our hourly trading chart. This is my entry. My hourly is my entry chart personally. You can see that that area here, 1248, is clearly stamped here on the hourly chart. A lot of resistance previously and a lot of support. You can see the institution moving average now being breached in the last hour. Okay, you can see the CTC is very much negative, and the RSI has dropped below the 50-period moving average, 50% line. Notice in this consolidated range chart testing, you can see the RSI has generally dropped to the downside. Okay, so as long as it stays below the 50% line now, it tells that that sentiment now is generally looking negative. However, we do need to see a break, a physical break, and close. We've got to see price closing below this 1248 because it's been a support area in the past. We don't want to be caught with our pants around our ankles. Got to see a major break below this support here, otherwise we risk the actual fact of being triggered into this prematurely, and we could see price moving in the opposite direction. So a nice bearish engulfing count, something like that. Yes, you are going to give away a couple pips. However, it'll just be generally telling us that we should be looking for any more than shorting opportunities long term. And if that's the case, and if we do get a break of it today, then we could look towards that 1235 for the new week as our next target. Next pair is is sterling against US dollar. Okay, let's have a look and see how that weekly candle's panning out. Well, here, totally different compared to his European counterparts. Here we've seen upside movement, and in doing so, breaking through a major resistance level recently in the shape of the 1575 mark. We've had a pullback now. You can see a lot of movement for the start of last week. However, by the end of close Friday evening, you can see price pulled back to at least, I'd say, 60% of that trading range. This week, very indecisive like its European counterpart. A lot of wick, and the body is very small, confirming that it's very indecisive. However, it is still above that 1575. So previous resistance now could become the new support. All three moving averages are still below price, and most importantly, our CTC has started to look positive. Has gone positive for some while now. So as long as it can maintain this level at 15,750 going into the new week, there's some news this afternoon with Jackson Hole, then we could see price continue on its run towards that 1600, that psychological level that we've seen price stalling at for so long over a number of months, as our next target. So if we drop down to our daily, you can see those candles playing out quite nicely here. A break, that major pullback after that major break. 3 consecutive days of selling. However, just recently a little consolidation range above that 15,800, which was that fib retracement level from the high of May to the low in June. This has been retracing. Price has been retracing above and beyond these pairs. So you can see 50% the new support. Price, as we speak now, going into the European session open, is testing that support. So 15,800 has to remain support in order for us to see any bullish upside movement. Otherwise, we could see price pulling back even further and testing at 1575. 1575 is the last port of call for this support. Get a break and close below that. We should be seeing price reverting to the downside with 1565 being tested, and ultimately way down here at 1555 as our long-term target for this pair. So CTC on our daily is still looking positive because we're seeing upside movement, and we are trading above a major support and resistance level, as well as all the moving averages below price, and CTC is blue across the board. We go to our 4-hour chart. You can see the negativity, that pullback, and then we've seen this little upside move here. However, yesterday's bearish engulfing candle engulfing all of this movement higher and taking us below that 15,800. Finds resistance now at 15,800, then we should see price moving towards that 1575, the major support, and a break below that. Then we should be targeting our institution moving average to the downside and moving way back towards that 15,500 long term, as that was our major support and resistance on our bigger time frame. So as it stands now, consolidating hourly below the institution moving average, all the moving averages. In fact, RSI has dipped below the 50% line, so you can see quite clearly that the attempt to move higher towards the to that area here at 15,900 failed to, because you can see quite clearly these highs becoming unstuck. We had a little shooting star exhaustion candle. We got our bearish engulfing, which clearly took all this movement, this positive movement, sideways away, so telling us our sentiment was bearish now. So you can see now we've had this move to the downside. So if you want to see a projection, the ultimate projection should be the high to the low, the pullback. There we go. On our hourly, you can see this candle over here, the last hour has been negative. We should see 23.6 back to the support here, 38, and the 50 would take us back to 15,750 as our first target. US dollar Swiss franc, let's have a look and see how the weekly is panning out. Here again, an indecision candle. That indecision candle coming at a price support and resistance level here in the shape of the fib projection level here from the August low to the August low of 2011, sorry, to the start of January down to mid-March low and projecting high. You can see 38.2 here, coinciding with that 1,000 mark, which happens to be a major support and resistance level. You can see price is heading towards the 23.6, which happens to be that prior consolidation area here between the 95 and 95.50 mark. So heading towards it, which happens to be the 20-period moving average on our weekly. Notice the CTC is still very much blue. The only thing that's really capping this is this institution major high here at the 1,000. So looking at our daily, you can see the consolidated range, the major trend. If I can just zoom out, there we go, being breached just recently, but still above the institution moving average. There we go. See the institution moving average still below price, supporting her on the way up. This area here at 945 looks like the long-term target for this pair, and you can see at the moment now consolidating like Europe is at the moment now. You can see the US dollar Swiss franc also consolidating on a bearish consolidation. You can see bullish consolidation for Europe, but bearish consolidation for the US dollar against the Swiss franc. Swing lows, swing lows, swing lows from those highs here at 1,000. Okay, and you can see that intermediate trend is in place. So if we see price coming unstuck here in and around this area, we could see price being forced to the downside towards that 945, 950, 940, 945 mark. A major support to the downside. So as it stands at the moment now, you can see consolidating at the highs. So in our 4-hour and hourly, you should see the charts showing you a bit of hesitation to the upside. Let's go down to those areas now. Here's the 4-hour. You can see that consolidative range above price here, a lot of consolidation. You can move that. There we go. That's probably a better area for price. You can see before hesitation, 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 hesitation. So here at 962 on our 4-hour, clear resistance, and you can see clear support below us at 955-ish. So trading in this consolidative range, just box it, tag it, whatever you want to do with our quarter, boxing it. Students will laugh at me when I say it, but we're either going to have a break of either side. The more likely, if it breaks to the upside, it's got to do a hell of a lot of work in order to get through all this negativity to the upside. Okay, but it does generally, if you can get a nice bullish engulfing candle confirming that sentiment is genuinely looking higher on our 4-hour, we've got this trend line, and we also have this major support and resistance level here at 970. I feel that if we do get one to the upside, it might come at a cost, because we have to eat into a lot of profit or upside movement in order to be a genuine candle, and there seems to be a lot of resistance to the upside for this pair. The other scenario would be a break of this consolidation here at 955, get a break of that consolidation at 955, and then we should be targeting that 945 daily as our long-term target for this pair. Last pair of the day is US dollar Japanese yen. Let's have a look at this pair. Consolidating since June between the 80 and 78, trading between this range, consolidated range here. Not really going anywhere really fast. A lot of support at 78. Bearish engulfing last week at this, just short of this 80 mark. Has seen price falling lower. Let's have a look at the daily to confirm that. Yeah, we had price finding support at 78, building on that momentum, breaking this consolidative range, heading up towards that institution moving average. Doing so, pausing, pulling back. We would like to have seen a nice bullish engulfing candle there, breakout, pull back, continuing back up towards 80. However, this bearish engulfing candle really taking away all of this movement, all of this actual gain here that we saw over that week. And then holding pattern yet again over the last week or so at the prior resistance area here. And you can see going into this morning's trading session, Asian falling all night into the European session open. And as it stands now, trading below this resistance level. It's got to close, guys. We need to see a bearish engulfing candle today in order to see 78 being back on as our target. The good thing is, if you look at our daily setup, we have everything in our favor at the moment. Now we have the CTC that remains negative across the board, so red on the other side telling us that sentiment is genuinely still negative. The moving average is all about price, including that all-important institution moving average. We have a red arrow on today's candle. However, we cannot go on that as a definite sell. We have to wait for this to physically close below this area here. So here again, end of week. It's far better probably just to give today back to the market and see what happens in Jackson Hole. Plus, see what happens how this one closes. If it closes lower than this area here at the 78, what have we got here? 78, yeah, 74.50 mark. Then we should be looking for further negativity for the following or for the new week. So, looking at our 4-hour chart, you can see the consolidative range, all the moving average, including the institution, still above price. Okay, very indecisive. You can see this consolidate. The CTC not really working all that well. It's not. This is the beauty of it, because it tells you that you're not in any bull or negative trend. You can see clear consolidation. We do need to see a break. A lot of wicks in the 4-hour chart here. You don't want to get caught into this. So rather bide your time, get a nice bearish engulfing candle away from this. The further away it moves, less like it's going to be subjected to that pullback, that magnetism it has. Excuse me, I can't say that word all that quickly. But get below 78.45, a nice bearish engulfing candle here. We'll definitely should look at 7,800 as our next target for this pair for the following week. So my entry candle, what do we have? Institution above price, negative. Consolidated range, all the moving averages above price, also negative. RSI, look at the RSI in this consolidated range as we still trading below the institution, still trading below that 50% line on RSI. So the sentiment is still negative on this pair. We just need a nice bearish break of it. We don't want to be caught, like I said to you before, with our pants down. This area has got to be breached in order to see further downside movement. Otherwise, we risk finding further support here and a reattempt of the 78.75-ish area back towards the institution as our target for the start of the new week. Notice the intermediate trend, intraday trend is negative. See that? Swinging low from those highs here, just short of the 80. Swing low, swing low, swing low, swing low, swing low, swing low. It's still swinging lower. We just need a break, bearish golfing break lower than the 78.40 here. And we should be looking for the shorts towards that 78, as I mentioned. That's for today, guys. Hope you have a fantastic trading day. Those of you who are still in trades, be aware there's a lot of news out today. There's also those very important meetings taking place at Jackson Hole today. Draghi is not attending, as we've all been led to be known. He's back in Europe, apparently. Spain, big problem. We all know. So if you're not trading, I advise not to trade end of week anyway. Rather see what happens on Monday, see what happened, panned out, look at the candles that happened today, close and take it from there. So have a great weekend with family and friends, guys, and I'll see you on Tuesday. We have a student arriving this weekend, spending time for some mentorship, so we're not going to be I won't be able to do the video analysis because I'll be spending time with him on Monday. So I'll catch up with you guys on Tuesday morning. Otherwise, have a fantastic weekend with family and friends, and I'll see you on Tuesday. Until then, trade serenely.